This is NDTV. And you're watching NDTV Prime in association with Micromax.
The Realty Debate with Manisha Natarajan, powered by Reliance Home Finance.
It all started with a burst of the housing bubble, and I don't just mean real estate prices or property prices in India. I'm today putting the spotlight on the online real estate digital space, where the big ticket investment in an upstart called housing.com and the entire saga surrounding housing.com, which was launched in 2012 by a team of engineers from IIT Bombay, shot to fame when Japan's SoftBank picked up 30% stake in the company for a staggering 610 crore rupees, taking its valuation to 1,500 crore rupees overnight. And then the trip came, with one controversy following the other, all in a span of less than 2 years. But what's more troubling is not the housing.com saga, but the other events, the Commonfloor takeover by Quikr, and now the death of indiahomes.com. These were companies run by sane and seasoned professionals. They did not go into a hyper mode at all. So what was the reason? Did they really crash and burn out? What happened? Why did they find it so difficult to survive? Today on the Realty Debate, we're asking this question. Has the real estate online space become the biggest victim of the real estate slowdown? Joining me today, Ashwinder Raj Singh, CEO of Residential Services JLL India, who've been the bravehearts of actually launching a product in the same week as you saw one big product crashing out of the market. Also, Dhruv Agarwala, CEO and co-founder of PropTiger.com, who started the consolidation streak by taking on Makaan. Manish Sinha, head Quikr Homes from a Bangalore studio. Again, a big player with big ambitions in the online digital space when it comes to real estate. And Sameer Jasuja, founder and MD of Prop Equity, who's, I think, got more questions for the participants today than even I have. He's been following it with a lot of interest. Now, let me just bring you some of the highlights before I go to my panelists. The latest victim, as we all know, India Homes, which has shut down its online primary new apartment sale business because of the slowdown and the funding crunch. Developers refused to pay the brokerage that they owed this company. The portal has been facing an issue of recovery dues, more than 100 crores from developers. So buyers, it's not just you who are stuck. It's even those who are selling for developers who are stuck. Another tough contender in the business, Commonfloor, had to give in to its investor Tiger Global Management's advice, who brokered the deal between Commonfloor and Quikr, owing to drying liquidity. Basically, we know the inside story that Tiger Global said, we are not going to give you any more money, which essentially meant if your lead investor is not giving you any money, then other investors are not going to fund it. So that management team was left with no option but to merge with Quikr Homes. Now the overnight star housing that we've already spoken about, we all know the story, what's happening. It's struggling to stay afloat in a cutthroat market. They've shut down their rental business. Their brash CEO Rahul Yadav, also though a maverick and a genius in some ways, has actually been ousted. And the rental business, like we said, is out. 600 employees are out, massive restructuring happening. And we believe that they're already hunting for prospective investors for a stake sale to raise funds. And I'm wondering where all that money has gone. That's a huge amount to burn. And Sameer Jasuja has all the numbers of how much this industry has already burnt. And in an existential crisis, Makaan.com and Realty Compass had to merge with PropTiger and Quikr. Both these companies could not find the next round of funding, and that's a fact. And we may have panelists denying it, but that's a fact. Okay, what's going on is my big question. So let me first ask Sameer Jasuja. Sameer, you've been extremely skeptical even when the housing funding came in. And I was like, wow, this is the space to look out for. And you were one of those people who continue to play devil's advocate. Analyze the situation for us today. What's going on?
Well, Manisha, what has really happened is that there was too much money that came into the online sector too quickly. That's one. The second part is that the domain expertise that is really required to understand these markets was really not there. So one was always looking at very big numbers on spreadsheets because of the market size of the whole opportunity. And that is where the big valuations were coming in. That's where big monies were coming in. And in the internet field, everybody knows that the winner takes it all. And billion-dollar icons are created or unicorns are created overnight. But this industry, coupled with the fact that the real estate market went into a huge slowdown and there was a huge mismatch on what is actually, it's a very complicated, fragmented industry compared to other industries. So misunderstanding the industry dynamics, and lastly, competing with big players like Magic Bricks and 99 Acres, which have been established players for the last 10 years on the classified space, did them, those are the reasons really why the market really started to suffer. And then investors started to lose hope because they are going to put in hundreds of crores, but they want to see results happening on the ground.
That's a summary. That's really actually a big summary. So now let me bring on the rest of the players. So Dhruv Agarwala, I mean, when you had launched everything, the market was disorganized. You needed to bring in transparency, and you actually did the business in a very sane manner. You were an institutional broker who went online and then also acquired Makaan, which brought in different sorts of synergies. So would you say that the math went wrong, the euphoria was incorrect, or would you say that really is the residential slowdown which has caused all of you sleepless nights?
So Manisha, I think the residential slowdown, has been a big factor in terms of playing a role in where some of the names you mentioned earlier are in the situation they are in. I think as far as the math is concerned, my view is very simple. You have to take a long-term view in this sector, and that long-term view could be as long as 7 to 10 years. So I think there's been a great mismatch in terms of investor expectation and what the industry has been able to deliver. So financial investors typically have time horizons of anywhere between 3 to 5 years, and if results don't pan out within that time frame, they do tend to get impatient. And that is why, as Samir pointed out, some of the folks like Magic Bricks and 99 Acres, without any financial investor in there, have that long-term view. Similarly, for a company like ours, which has, I would say the only integrated end-to-end platform in the country today, with the Makaan being the listings marketplace and PropTiger being a service provider. We have News Corp in there, which is a large global player in digital real estate with a I would say rather a global strategy, and India being a core part of that global strategy. So again, time horizons for us is long.
Okay, let's bring in some of the new kids on the block. Manish Sinha acquired Commonfloor. Last time I remember we just kind of got you on a discussion with great ambitions and very, very solid story on the rentals part of it, and of course lead generation. Housing is shut down its rental model completely. How is it working for you all? I mean, I just want to know, from then to now, it's been 3 months, integration must have happened now, and you would have a much, much clearer picture of whether this market is going to be a slow one, will give you some time to grow, or is it going to cause you a lot of heartburn?
Thanks, Manisha. Actually, it's good to be on this chat with a bunch of friends, because I know all of us are big believers of both the real estate and on the online space. I actually do think that, like Dhruv said, this is a long haul, and we are talking about fundamentally changing the industry in terms of how people behave in making choices and making investments, and that has been a very disorganized environment on the one hand. On the other hand, investors have put in a lot of money, because everyone believes that there will be one big victory out here, if maybe possibly more than one, but maybe 2, 3 victories out here. And therefore, there have been a lot of investments made. And as it is natural in a place like this, some of those plays are actually deciding either to merge or to call it quits. I don't think this is the time to declare that things have really gone bad. I think this is the process of building a new industry, and the online real estate industry is going through that. When I see what we have been doing, because we started, like you said, I like the phrase "new kid on the block." It gives me the feeling that we are young, which is great feeling. As when we started, since that time, we have actually gone ahead and brought in a lot of companies. The integrations have been very positive. And I see a lot of interest in the customer base.
That was my question, Ashwinder, that these casualties have perhaps been brought on much earlier than what they would have because of the slowdown in real estate. Is that, I'll come to why you've launched a little bit later, but do you think somebody like India Homes, it was not a badly run company. They had good both online and offline models, some good technology products. Developers not paying 100 crores is not a small amount for a small digital venture. It's not an easy amount to carry. You've been in this industry for a long time and been dealing with the developer community. This slowdown, is it going to cause more casualties is my big question as well.
See, India Homes has been a really story which everybody is talking about. I have my views on the numbers that you just shared, Manisha, but we can take that offline. I think this business is very different than the other online businesses, and what promoters at times, the investors make a mistake is that it is not selling a cell phone online, it's not selling a camera online. This is consultative selling. So the growth path, the growth strategy has to be very different because the sales happen over a period of time. And that's where the whole mystery is. This business is more about financial discipline, selecting the right product and selecting the projects properly. And it is a very people-oriented business, unlike any other online business, which is more technically driven, speed and scale business. So I am very positive about the industry, and I think over a period of time, if people get the model right and they focus on monetizing this business properly, focus on transactions equally well, I see a lot of hope, but it is going to take time. And people who understand the domain very well will definitely do better than others.
Ashwinder, will your management give you time is the big question. I mean, how much time have you bought from them? Because irrespective of what you say, it's going to take a long time for your new venture to actually, JLL known for its office space and every other business, residential is a new baby for them, and now taking it online, that's a big decision.
So let me tell you, we don't have private equity investors, number one. So our money is long term. Secondly, these decisions have been taken over a period of a year and a half, and it was not a knee-jerk reaction. There's a lot of work which already went into it. And, Manisha, we are a profitable franchise and our margins are quite healthy. So there's a lot of money which has been plowed back from the profits that we have made. Our understanding of the domain, I think, is the strongest in terms of relationships with developers, what the clients want, how do various segments in luxury, affordable, mid-work. Our expertise on the luxury side gives us better margins. So all of this ensures that we know what we are getting into and what kind of time frame. So my time frame is not going to be as long as maybe what Dhruv said, 7 to 10 years, because I have a different theory. And I think if you can't be profitable in 3 years, I don't think how you're going to be profitable in the next 4 years, or what is so different that you're going to do.
Okay, so let's come down to that. What is your time frame, Manish Sinha, to get profitable?
So for us, Manisha, we actually are a part of a big conglomerate. So I'll only speak about the homes side of it, right? Because there is too many other things in Quikr, and
only
we are
homes,
seeing that
because but every vertical now, Manish, is under pressure to actually turn profitable. It's all over newspapers and all over tech websites. No investor is not asking for individual verticals to also become profitable. What's your time frame?
It's less than a year, given the clip at which we are going right now.
Really? You think you'll break even in less than a year? Would you recover the investments you've made, or because some of them have been cash, some of them have been equity come cash? I mean, there've been all kinds of combinations. We don't want to get there, but 1 year.
Well, there's a bunch of investments that we have made that are not purely real estate and listing type. So our massive investment in Vonobo, which is actually about creating street vision,
right.
That is obviously something that Quikr Homes is using, but all the other divisions are. I think that has a longer time frame to get profitable. But when you start thinking about the core listing environment, yes, I would say, about a year.
About a year. Wow. That's really quick, Sameer. I mean, we know that 99 acres is having trouble having that number. There was one quarter, because it's a listed company, InfoEdge is a listed company, you do get to see, they just made a small profit in one quarter. But after that, they've been the longest player in that listing space. They're not breaking even or making money.
Absolutely, Manisha. For our viewers and for everybody, 99 acres launched in 2005. It's been 11 years and they still haven't been able to break even. They've lost or they spent close to about 150 crores already in reaching a level or a turnover of 100 odd crores. So the market is very large with respect to the classified segment. It's about a 4,000 to 5,000 crore market. And companies such as 99 acres or Magic Bricks, which have a big lineage and big money backing them, will fight it out till the end to be the leaders in that space, because that is core to their business and this market size is large enough.
So my next question is then should, like for example, I've heard latest, and this could be a rumor, it could be true, that housing now is in its attempt to reinvent is also looking at transaction. Dhruv Agarwala, what is the merit? I mean, here I have Ashwinder and you both in the transaction model, and you also trying to pad up on the listing model with the Makan. So what is it? I mean, what model will survive, and B, how many players will survive in each of these models? Dhruv, do you want to take that?
Yeah, I think, Manisha, my view is that at the end of the day, you have to participate in both the spaces, whether it's the transactions business or it's the listings business. And I think there is a reason for that. I think India is still a developing sort of market as far as real estate goes, with regulations just beginning to happen, brokers and developers just being held accountable for their actions. So in a market such as this, where trust is a huge deficit, consumers are looking for brokers or institutions who can not only help them with search and discovery, but actually handhold them through the entire transaction. So it makes sense for branded folks like whether it's JLL or Housing or Prop Tiger and Makan to be involved in the transaction space as well. Having said that, it's also important to help the consumer in the search and discovery area as well. And definitionally there, if you are just a transactions player, you're not best suited to doing that. For that, you've got to be a marketplace or a listings player, which allows multiple sellers to sell on your platform and to give buyers complete independence of choice. So, for example, today on the Makan.com platform, you will have competitors of Prop Tiger in the transaction business participating as well. And we are perfectly fine with that, because ultimately you want to provide consumer the choice when it comes to picking the best agent or the best transaction services provider.
So you're saying that it's important to actually be in the entire life cycle of the product, which essentially means from listings to transaction. Manish Sinha, have you thought of that? Or, I mean, Quikr model is clearly a marketplace listing model for any product. Is there any thought that transactions would be something, a future forward business?
Of course, we think about it all the time, Nisha, and actually have worked very closely in environments like that earlier. I do believe it's extremely important for the real estate industry for a good transaction, a professional transaction environment to be there. And therefore, I'm looking at companies like Prop Tiger and JLL to actually develop that. I don't necessarily believe that's our target area. So I would actually say that that's where we would like to, I would agree with Dhruv, and I would hope that Dhruv actually does a good job on the transaction side so that we could help our customer collectively. I don't see we are going down the transaction line.
Okay, how many players will survive? Vishwinder, I mean, just wear your JLL cap now, not of your new digital venture. But if I were to just look at this market, you've got, of course, deep domain knowledge, and JLL comes with a different sort of a history. But if you were to look at the market, rest of the market, how many will survive? 1, 2, 3. US has actually just 2 or 3 surviving, 2 in listings and maybe 2 in transaction. That larger market and 4 players.
So just to let you know, Manisha, we are already profitable, and whatever we've invested in our digital enterprise is our own profits. So from that perspective, I'm very happy and comfortable. Secondly, transactions business is a very tough business. And that is the reason most of the players don't want to get into it, because there are many, including 99 Acres, who had a transaction arm which they closed. Because it needs deep domain knowledge.
So you've said that. My question to you is, how many will survive? Do you have a number?
I think on the online side, if you look at it, the difference between the top player and the second player is huge. So after Google, which is the next discovery site, after Facebook, which is the next social site, after Twitter, which is the next site which competes, I don't think there are going to be more than 2 players which are going to survive on the search and discovery model. Secondly, my view is a little more different also, that I don't think the Indian consumer really wants a search and discovery model. We are a very deal-driven society. We are a very smart society.
So you're saying transaction models have a larger chances of success. I'm not very sure of that, because that's another big discussion. But Sameer D'Souza, final view to you, how many will survive?
Manisha, there are 2 different businesses altogether.
Yes, we're talking about transactions, we're talking about search and discovery.
Absolutely.
Or listings. So let's take a look at both.
I think if it comes to search and discovery, I think there will be 3 players that will survive, and they will continue to fight, because they are not going to give up on the space.
All right.
And they'll have enough deep pockets to back them till eternity. That's one. And I can name them if you want.
Why not? Let's hear some names.
It's clear,
we'll bring you
99
back.
Acres and Magic Bricks, and there's going to be a third classified player that could be a Quikr, or that could be a Snapdeal, or it could be a third classified player that would emerge, and that's going to be probably it, according to me, on the classified
I think, Dhruv, you
side.
better convince him it's going to be Makaan,
Or it
right?
could be Makaan. It could be Makaan too, because of the News Corp lineage, right? So, but they're not more than 3, because News Corp, I don't know whether they'll give up or not, but these 2 guys ain't giving up, because they have, this is a 4,000 crore market. 99 Acres is a $2 billion company backed by, and they're going to go after classifieds and not.
So 99 Acre, Magic Bricks, and one third player. We'll wait for that dark horse to emerge. And Quikr, you've already said, could be Makaan. All right. Transaction
on the transaction side, that's a brick and mortar business more so. It requires an online presence. You cannot do without an online presence. So there, if you look at some company becoming really big in India, that's not about to happen. But since it's a brick and mortar player, many businesses will survive.
All right. So in transaction space, you feel that there's an equal chance for a Prop Tiger and a GLL to survive, but definitely
there is no billion-dollar company coming out of a transactions play.
Okay, let's wrap out on that. I think that there should be a, that's the reason why Manish Sinha is only thinking about transaction and not going to get into it, and hoping that Dhruv will actually develop that market. But gentlemen, thank you very much for joining in today. Extremely interesting debate. Ashwinder Raj, pleasure to have you with me. Dhruv Agarwala, always good to have you. Manish Sinha, all the very best with your business. Sameer, thank you for wrapping it all for us. On the other side, Tier 2 cities of West India. We've started the series. We've already looked at North India. We've got many of West India also lined up. But when we speak of Tier 2, Pune may not actually be Tier 2. It's stuck somewhere between Tier 1 and Tier 2. Interesting. That city, Ahmedabad, and many more. Where is real estate in these cities going? Come back and stay with us.